Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right. No extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Ben Reinberg. Ben is the founder and chief executive officer at Alliance Consolidated Group of Companies, LLC, and is a prominent figure in the commercial real estate acquisition and investment, and is widely recognized as an expert in development and structuring of commercial real estate transactions. Ben brings an immense value to the dealing process and his ability to build trust quickly, raise equity efficiently, and solve problems and bridge gaps between buyers and sellers. Ben, looking forward to this. Welcome to The Wealth Flow.
Thanks, Keith. I appreciate it. Thanks for having me on the show and look forward to adding a lot of value to your audience.
Absolutely. And I'd like to start really with your background, really where you grew up and what eventually led you to a profession within real estate.
I grew up in Chicago. That's where I'm from. You probably hear the accent. I got a heavy Chicago accent, a lot of people say. So I grew up in the north suburbs of Chicago, and where I grew up, there was a tremendous amount of icons in commercial real estate that invested around the world. And I say this frequently on my new TV show. I say it on podcasts I'm on as a guest, is that guys like Sam Zell and the Pritzkers and the Crowns and you name it, just tons of fabulous, successful, wealthy individuals investing in commercial real estate. And when I was a kid, I would see that. I would see the different buildings and the skyscrapers, and I would see Hyatt hotels and all the things that people did. And I said, one day I want to be that person. One day I'm going to get into commercial real estate. I've always been an entrepreneur. I tell a story when I was 8 years old. They used to sell cigarettes at a bar, and that kind of launched my entrepreneur spirit. And I used to buy cartons of cigarettes, break them up in the bars in the 1970s and sell them individuals at the bars. You could walk in the bars when I was a kid. And it was like the Wild West. And so it was all about how do you make money and how do you survive and buy candy and Slurpees and do all the wonderful things as a kid. But what that led me to is a great work ethic and the drive to say, how do I build wealth? And so coming from Chicago, real estate, especially commercial real estate, is big. Multifamily is big, office, industrial. Every asset class is touched in one of the largest cities, not only in the world, but also in the United States. And so for me, I had the good fortune to learn industrial and office. It was very prevalent when I was younger, in my 20s. That's how I got started. I started Alliance when I was fresh out of college. I graduated from Indiana University. I was a CPA, didn't come from money, but had to figure out how do I start a business from a shoestring. Did that and grew. We built millions and millions of square feet of office and industrial, owned retail. We are one of the largest medical office owners and veterinary office owners in the United States now, as well as multifamily. And so we got into medical office 20 years ago, veterinary office 10 years ago. We still do industrial, and we look at different verticals all the time. I mean, the fact that we launched a multifamily division this year was a real step for us because we wanted to do that for a while, but we wanted the right timing. We thought now is the right time. We started a hard money lending division recently. So we're always looking to add value to our investors. Our investors are typically high net worth individuals, family offices that invest from around the world into our syndications as well as funds. So what I am, my career is I'm a fiduciary of capital. I've been doing this for 3 decades. I love it. I'm in the prime of my career. Instead of Chicago, I now sit, as I'm sitting right now, in Newport Beach, California. So
Nice.
I've graduated to good weather and a good environment, especially for commercial real estate. And so our headquarters are still in Chicago. We have offices around the country. And so really proud of our staff. They should be really proud of ourselves. We've come a long way for decades. We've been through different cycles, different presidential administrations, and had to grind our way through it. And so for us, we're excited about 2025. We think there's going to be great opportunities. And so I think commercial real estate is going to take an interesting turn in the next few months. I'm very excited about it.
Well, maybe that's a good spot to start, Ben, is, I'd love to hear your perspective on that. Obviously, with decades of experience in, office, I'd love to hear your take on that as well right now as to, what do you feel is going to happen? But more in general, what do you feel is going to be this turn in the market that you're going to see?
Well, in 2025, Keith, we have trillions of dollars of commercial real estate loans coming due. People put financing on in 2020 and 2025, they're coming due. So there's going to be a lot of opportunities to buy debt. There's going to be opportunities to buy properties where you have motivated sellers. And these are times where you're not going to see for a while. And so for us, we're keeping our powder dry, raising a lot of money, and we're out there just hustling, looking for deals, especially in our medical office fund, the Alliance Medical Fund, really focusing and humping to find opportunities to enhance our investors and create value out in the world. And so for us, we're excited about that. We're excited. Interest rates are going to probably drop a 1/4 point. They're talking about in November, and maybe 1/4 in December. So interest rates could come down a little bit, which means maybe there's an opportunity for us to sell some properties within our portfolio as well. So we're very excited about that. We're excited that next week we're going to see who this new president coming in is going to be, how that's going to impact our business. It could have different impacts. And so we're looking at that closely. I don't have an answer yet on that, but I think it's going to be a way that if we start producing energy in this country, it's going to have a drastic impact on our business, commercial real estate, which means liquidity will start flowing throughout the banks. There'll be opportunities to finance it. Interest rates, spreads will come down because there'll be more competition. And so for me, I'm really excited because when there's chaos in the market, Keith, that means there's opportunity. And that's what 2025 to me looks like. From the decades of years I've been doing this, I've seen these different cycles. And I like the fact that they're trying to lower interest rates to kind of get the economy going. Because to me, the economy really is struggling. I mean, look at yesterday. You want to talk about a perfect example. Yesterday, we had 12,000 new jobs added. It was really low, okay? And they're blaming it on the hurricane, and I can't remember the other excuse the media gave it. But what's really important to note that is that's been going on for months. And there's companies that have filed for bankruptcy that we've seen, different retailers, we've seen different companies. We work with a lot of people that work through bankruptcy, and to see what's going on, we see it behind the scenes. The economy is not doing great. There's not a lot of job growth. And so 2025, it really depends on what we start doing. If we start producing revenue as a country, that could change the economy. If we don't, then we'll probably go into recession, deep recession, and there's going to be a lot of buying opportunities, not a lot of selling opportunities. So that's what I see coming. I'm pretty good at predicting these cycles. And what I see is there's going to be great opportunities to buy no matter what happens next week. And it's exciting times. And so I'm looking forward to it and seeing where it takes us in the next 24 months.
Okay. And, and I think you're correct on that. How about, obviously, not to get political, but, just in hearing you talk, obviously, I share that depending on who wins, certain things will happen. Who are you feeling like has this at this point, or is it a complete anybody's guess?
I think the country, Keith, is frustrated upset about the lack of growth going on in this economy. I think the biggest misnomer, what disappoints me, is that we don't have a fair media. We don't have a media that's really non-biased, and it goes on both sides. It's not just whether Democratic or Republican. It's more of no one's just reporting the news. There are a few channels out there. I know that, my kids, when I look at them, they go to X or they go to Truth Social. They go to some of these social media platforms. They're really giving them information, which I think is great. I love that my kids would go out and do that and find the truth, because that's what Americans should do. And what's frustrating is that, different generations are seeking the truth how they have been passed. So, for example, if you take my parents' generation in their 80s and people in their 70s, even their 90s, people are living longer, Keith, they're relying on Main Street news. And it's more of an opinion show. It's more of not fulfilling and playing clips in their entirety. And so people are polarizing people. And what's interesting about this environment, we've seen the last couple elections, is that people they don't spend the time to watch or listen. It's like, let me see a 2-second clip, and then I'm going to make a judgment on a person. And that's what's wrong in our society, is that we don't really seek the truth and what's really happening and what people are doing. I do a lot of research. I look at inflation in my office. When we deal with inflation, we look for the truth. It's not 9%, it's in the teens. And that's how we know. That's why we look at our investors. When we say to our investors, look, if we could break even because it's 14, 15, or 16% on something, an investment, that's what we're trying to accomplish, at least break you even. It's not going to be 8 or 9% you're seeing in the press or the media. So that disappoints me, because why can't we just tell the truth and say, hey, this is what's really going on in our society? And I feel that it's given Donald an edge where the American citizens are fed up and tired of not protecting our borders, which impacts commercial real estate, by the way. We see in Arizona, in some of our properties, we see more homelessness and more issues on vacant pieces of land, maybe sitting next to some of our properties that we have to deal with, putting up fences. We're spending more money to deal with illegal immigration. So we've seen it firsthand. And I'm from Chicago. I go back to Chicago. I see it on the street corners. I see families with their kids just sitting on the corners. I see more homelessness as well. And so we have real issues, and they're not being addressed. Instead of, it becomes of, how do I stay in power instead of helping the American people? We need to put the citizens of the United States first. It should always be that way. And it should be in all our decisions we do. And right now I feel we lack that. And hopefully, God willing, that's going to change next week. And we're going to put this country first and put the American people first. And that's what we need. People, I talk to our tenants. I speak to employees at Alliance. I speak to colleagues. I travel a lot, Keith, around the country. I'm fortunate enough to meet a lot of men and women in the United States from different cultures, background, ethnicities, you name it. And the sentiment doesn't change. I don't care what color you are. I don't care what you do for a living. We're all bleed the same. And it is tough for American families to put food on the table right now. Gas is through the roof. I live in California. I drive an electric car. I drive a Tesla. Elon makes incredible cars. But gas prices, to me, was the reason why I got a Tesla. And so I look at the cost of living to raise a family. And my kids are older. I'm very fortunate. But to raise a family in this environment is really challenging. You go to the grocery store. I mean, you look at the prices of everything. It's insane. We just got quotes for our health insurance at our company. My health insurance for me and my family went up 22% from this year to next year. It's a lot. I mean, I've been wildly successful and I can absorb these costs, but it's crazy how expensive it is to live in this country. And so these are the things that I see. These are the things that the American people see. And I hope and pray that the American public stand up and they make a noise. And I believe in my heart, there's going to be more voter turnout than we've ever seen in this country. And as long as it's a fair election and they clean up, it's disappointing. I mean, there's voter ID where I'm in California, you don't need ID. It's a recipe for fraud. And so hopefully that's going to change in our country. Keith, when people go out and they go buy a gun or or they go and they get a passport, or they go to the airport, which I do frequently. I travel a lot, however you fly, and you have to show your ID. You go into a hotel, you have to show your ID. Why is it everywhere we are showing some sort of government ID, okay, at all these facilities, whether it's public or private, which is good. It's legitimate. You should. You make a reservation for a car, you should show your ID. You should show who you are and be proud of it. And so when it comes to voting, which is such an important aspect of being a U.S. citizen, why aren't we asking for ID? It boggles my mind. And so I look at this country and I see these things. And I say, well, is this where my kids, and as they age, and my grandkids and my great grandkids, society? And so I think it's time that people do rise up and they have a voice, and we stop censoring people and we allow people to have an opinion. And I think, Keith, one of the biggest things that I'm teaching, especially my kids, is really seek the truth in what other people are saying and respect other people's opinions, because I think people are foolish because they don't grow and learn in this environment. And that's been the key to my career, is really paying attention, listening, so we could pivot if we ever need to in any of our investments.
For sure. No, I completely agree. And yeah, it is mind blowing about the IDs. Not having to show an ID. My daughter just started a new job and she had her driver's license, but first day of work, they had to tell her, no, you can't start, because back here in our safe was her social security card. So, they needed the 2 forms before they'd let her start. And that's
how it should be. It should be like, if your daughter's she's gonna fill out a W-9, she's gonna show her ID, and because they have to pay her, and they got to pay her above board probably. And so at the end of the day, it's like, if whatever her name is, you got to make sure that paycheck and also what other people don't realize is the liability aspect. They're insuring all these people. God forbid your daughter slips and falls on the property. They got to make sure it's really her and they know who she is. And so how is voting any different than any of the things that you and I and everyone in the public deal with? Just look at your daily life. You go buy a bottle of alcohol, and now obviously I got the gray hair. I don't really get carded, but there's times where I'll get carded in certain states. If I go buy a gift for someone, go buy a bottle of wine or whatever it is, I'm getting carded. So when it's alcohol, drugs, or guns, or hotels, or airports, or the post office, whatever it is, you show your ID. Why is voting any different? And I know the answer. I'm not going to say it, but it's really sad that we have to make it political because for an ID. It's just terrible.
Yeah. For sure it is. And so maybe going back to just office, when you started with office, did you start in the medical office space, or did that kind of pivot over time?
Yeah, what a great question, because it really resonates with me, this question. When I started, so I looked at guys like Sam Zell and some of these large office building icons. I said, that's what I want to do. I want to own skyscrapers and large office campuses around the world, and started to buy those. And we're doing well. And we realized that when the internet became more prevalent and we started going through different cycles and seeing vacancies, we said, this is going to be a tough asset class, especially in the suburbs, because people don't need as much office space. And as that developed, the internet, we saw more people were working hybrid and remotely, or from their phones or from coffee shops. And so we said general office is something we really need to take a look at and maybe sell within, in which we did. And so 20 years ago, 3 decades, we sat down with our investors and took a hard look, and we said, Keith, what's something that's going to grow and always be around? And I said to my investors, I said, the human body is never going out of style. We need to learn medical. We need to get involved. And that's when I got involved in medical, was 20 years ago. It was general office opened the door to have that discussion, because we were looking at it and saying, well, if general office isn't going to produce cash flow and upside, and the tenant improvement packages keep growing because there's a limited amount of tenants, and the tenant rep brokers around the country are charging an arm and a leg, it's hard to make money. And the costs and taxes, insurance were rising as well. And so for us, we saw the margins of general offices shrinking and the demand for general office that was shrinking. So that's when medical office morphed in our portfolio, and we started learning and double downing on it. And we started with dialysis. Dialysis went really well for us. Then it became every niche within the medical office industry that we started acquiring, and we've been going ever since. And so it's really been a wonderful asset class for our investors. And I look forward to the next decade of acquiring and managing our portfolio of medical office and even veterinary office. Veterinary office came about 10 years ago because one of my colleagues called me and he said, "Do you ever consider veterinary office?" And I said, "Why would we do that?" He's like, "It's just like medical, and the pet industry is growing rapidly." So we got involved. We baby stepped into it and bought some clinics, and clinics became hospitals, and hospitals all of a sudden we buy a horse and cattle surgery center in Texas. And so, yeah, we own reptile facilities, pets, different pets, horse and cattle facilities around the country. And so we really got to learn that business and establish some great relationships. And so that's been a real aspect. And what we did is with the Alliance Medical Fund that we continue to raise capital for and acquire deals, we said not only medical, let's throw in veterinary office into that portfolio for our investors. And so it's worked out really well. It diversifies them and it allows us to scale and allows investors to make a tremendous amount of money in tax benefits, but also diversify their capital. And so general office, it's really tough. I mean, there could be opportunities to buy it, but the question is, in some of these markets, is the office market ever going to be the same with all these phones and tablets and people are working remotely? People work from home a lot. I need an office. I'm a big office guy. Look at me right now. I'm sitting in my West Coast office, and this is where I'm going to work today. I like the office environment. That's how I learned. Growing up as a young man in early 90s in business, that was how it was. And in Chicago, what I miss, Keith, is at Alliance, we always had an office with everyone, and people go out to lunch and talk at the water cooler or in the kitchen and laugh and those days are kind of limited. And so going into an office has changed a lot. And so business has changed drastically.
Yeah, it really has. And it makes sense, the medical. Tell me a little bit about, from a geographic area, where all is Alliance purchasing? Are there some markets that seem to be better when it comes to medical, or is medical pretty stable all the way across the states?
Medical is fairly stable. I mean, we are very specific in our buy box at my acquisition staff. They use that word, the buy box. What we used to be very Midwest centric when I was in my 20s and 30s. And then we started acquiring down south, and it started in the Southeast and then the South and Southwest and Mountain West. So we own across 30 states in the United States. When it comes to medical office, we'll look in every state in the union, but it has to have a certain criteria. But generally speaking, when we go and acquire medical office, as an example, we're looking in population growth areas and states, good pro-growth policies for business. We looked at, if you take the pandemic, okay, which we did very well throughout the pandemic, we own properties in areas where there was minimal shutdown. And so take the state of Florida, which has been a wonderful state to Ben Reinberg as well as Alliance. I'm grateful for Florida and all the states we do business in. But I would travel down there in the pandemic. My staff said, "Hey, can you go get tested before you come back to the office in Chicago?" Which I would. I would go to a drugstore, get tested. I'd be fine. I'd head on a plane, come back to my office, and I was great and I was fine. So we looked at all these factors, and it kind of stemmed from what we were currently doing. And we said, yeah, we made great decisions. So investing in the Carolinas and Alabama and Florida and Georgia, we do own a lot of property in Virginia and Texas and Louisiana and Mississippi and Kansas and Oklahoma and, Arizona and New Mexico and all these cities that are kind of the smile states of the United States has really been a large focus of ours. And so with multifamily, with that new division, we're looking at really tertiary markets. So we might buy in Louisville, Kentucky, and Lexington, Kentucky. We might buy in Indianapolis. Indiana and Indianapolis is a really good market. Chicago is kind of bouncing back for certain type of product types. And so we'll still look in the Midwest. We'll look a little bit in the East Coast. West Coast, we're very specific on where we go. There's great markets. I mean, Nevada has great markets. We own Vegas, and Reno is a great market. Boise, Idaho, Pocatello, Idaho's good. Utah, Salt Lake City is a really good market as well. And so there's wonderful cities. There's so many great cities and areas in the United States to own commercial real estate, but it just depends on the niche you're doing. If you get into industrial, and we're very well versed in industrial, are you going to invest in a 24/7-hour city where there's 3 shifts, 3 8-hour shifts? They call it a 24-hour city. So what's an example for everyone out there? Seattle, Houston, Savannah, Georgia, Miami, Chicago. These are all port cities, and so they're great areas for industrial. So depending on the asset class, depending on who you're investing with, if you're investing passively or if you're in the business like I am and you're getting involved, it's a way for you to kind of analyze where you want to be. I always give a recommendation. I have a lot of young men and women that call me and direct message me and reach out to my office asking questions. And one of the questions is, where do I invest and how do I get started? And a lot of people, what I tell them, Keith, is pick a niche, focus. You get rewarded for focus in life, and that's a fact. And pick an area. So for me, as my example, so everyone can hear this, is I started in Chicago. Chicago was a large market, had a lot of office industrial where I started my career, and we were building and developing as well as owning. And that was plenty for me. And then when the internet became prevalent, I was able to build up my resources. We started branching out to different markets. But I always recommend is pick a niche, focus on one area, master that area, master the real estate, and then you'll do fairly well.
Yeah. No, makes sense. And on the medical, tell me a little bit about this. So are these single tenant? I assume they're all triple net, but tell me what it is that's in your buy box. What do you look for? Single tenant? Do you look for areas where you can have like a primary care and maybe some other specialty that are all part of that same complex? What is it that Ben and
Yeah, it's a great question. It's all the above. So if you look at the Alliance Medical Fund as an example, we buy single tenant, multi-tenant. We look for what are the best opportunities out there to mitigate risk and produce profitability. So when you invest in the Alliance Medical Fund, it's safe, secure, and profitable investing, Keith. And what's important about that is really understanding the real estate fundamentals. What's challenging about medical office when people try to get into the space is it really takes years to understand the barriers to entries, the real estate fundamentals, how do the hospital systems work and correspond with their different patients and doctors. You really have to go a little bit deeper into the business. But we have an upper 80s percentile renewal rate on our leases. And so for us, regarding, it could be single tenant, multi-tenant, and it's all about risk. It's all about risk and how we assess risk. And that's one of the things that we master at Alliance is making sure that we are good fiduciaries of capital for our investors, but really understanding the downside and protecting the downside in an investment. And that's really important to us. And so it's really not whether it's single tenant or multi-tenant. All our tenants in medical, generally speaking, are net leases, whether it's double net, triple net, absolute net. Generally speaking, the tenants will pay for the expenses, the operating expenses and tax and insurance that are passed through to them.
Okay. And with respect to that, what from an investor standpoint, what type of a hold period are you typically seeing on those? I guess let's start with that. How long is?
Yeah. So typically in our investments historically, we try to be in and out within 5 years or less. Now, different structures can lend itself different ways. So, for example, I'll give you an example. We own a surgery center. It was a syndication, phenomenal deal. I think I'm the largest investor in that deal. We went from a $9 million property, increased the values into significant, almost doubled or 2.5 times the value. We ended up refinancing, paying all our investors back. Now we cash flow on that property, and every quarter we pay out cash flow to our investors where they have no capital in the property. So generally speaking, it's 5 years. Some structures lend itself where We might pay off people's capital and own the property with them and not dilute them. And so it depends on the structure. But generally speaking, from a term length, it's about 5 years or less typically. Some deals we've owned longer because it's been beneficial for our investors, and then we sell it. We also, though, the investors come first, Keith, and by saying that and believing that and doing that, that means you have to protect your investors. So after 5 years, if it's not opportune time to sell because of market conditions, we'll hold it. And our investors understand it. The key of dealing with investors for anyone out there or anyone interested in investing is communication. Communication is something that I am a big proponent on because I'll tell you the good, bad, and ugly. You're going to invest, you're going to see everything. And by doing that, it's all communication. Why do we do different decisions? What do financial statements look like? What's going on at specific buildings? What kind of improvements or capital improvements we need to make at a property? What does cash flow look like? What kind of reserves? How do we protect your money? And so we are big into educating, Keith. And by doing that, it's not only the quarterly reporting we do for our investors, it's also the webinars we give twice a month. I personally give webinars twice a month. We bring on a guest. We talk about a certain topic. There are people that come on from around the world. But I also do a webinar where I'm educating people on our investments that if you're an investor. And so we're big proponents of full transparency. Full transparency is everything when it comes to investing. When you can provide someone full transparency, Keith, it's huge. It's a way for people to turn their back, know that Alliance is going to put great profits into their pocket, but also allows them to know that their money is safe and secure and that they're being communicated with. It's why we've been around for 3 decades. It's because that communication is so important. When you invest with us and you're an investor, for years, even when I got started, I always want our investor to have a 7-star experience. I always want that white glove experience. I always want someone walking away and saying, wow, that was really a privilege to invest with them. Hopefully I could do more and see more opportunities. And so that's how we look at it. And it hasn't changed and it's only strengthened. And, with these investor portals and the internet, it's made it a lot easier to communicate with our investors. I mean, back in the day, if you can imagine, it was checks and envelopes and stamps and personal letters with my signature on it. And it was a tremendous amount of work. And now that we have the internet, we can instantly write a letter, shoot it out intermittently within a quarter, between the quarters, and communicate. And that way investors are like, okay, I'm not waiting till the quarter end. They just signed a lease at this property. Great news. And it just added this much value. So communication has really helped with the internet. And if you use it right, it's really a win-win for everyone.
And on the properties, Ben, that you're purchasing, maybe staying on the medical and the veterinarian fund, but are you looking at existing properties? Are you doing development on some of these? If it is any existing, I guess kind of the follow-up question with that would be, what are you looking for? What opportunity to be able to increase value are you looking at on those?
Yeah, so generally speaking, if you take the Alliance Medical Fund as an example, we're buying existing assets that we could add value or that cash flow. All our properties require cash flow. And we'll add value through credit enhancements, rent escalations. We'll look at flexibility in debt. And what we do is we create the ability to hold. So we can ride through different cycles and different events that go on while we're adding value. We add value through capital improvements. We add value through lease renewals. We add value from increasing rent. We might do an addition on a property. We might add parking. So we're going to do things where we can add value so we can increase the breadth of our audience when we sell a property into it.
Okay. And how about from a debt standpoint, how much leverage are you putting on these? What seems to make sense in that particular asset class?
That's a good question. One thing I pride myself on is at Alliance, we are outstanding at securing debt and make sure that we put the best debt. The key to putting debt on is flexibility. Most people don't realize that is having flexibility, but also be able to have a correspondence and a relationship and communicate with your lender. A lot of people don't understand that. They go and they get out CMBS debt or life insurance, and they don't have a relationship with their lender. And so when there's issues that arise, they have no one to speak to. And so it's really important how we look at debt is flexibility. We want to make sure we have a good relationship. And so what does that mean when you're assessing debt? You want to look at, it's not just the cost of capital. It's about how do you solve challenges, how the lender ride with you if you do have a challenge to protect your downside and your investors. So one of the things I've learned in my career is not to over leverage properties. I'll give you an example. Okay. A friend of mine has a guy call me at the office. This guy lives out in California, and I help people all day long. And he said, look, I'm a friend of your buddy Mike. I was wondering if you can help me. And the issue he has is he bought the property when the market was hot. He put debt on it, and his debt is millions of dollars more than the value of the property right now. So he can't refinance it. He can't raise money to bring in investors because any prudent, sophisticated investor is going to look at it and say, you're over leveraged. How am I ever going to get return on my equity out in this? It just doesn't make sense. And so he has an issue. And part of that, the lesson for everyone to learn is don't over leverage your properties. By over leveraging your property in this example, he's really probably going to lose the property, or he's going to have to sell it and go back to his lender and say, look, this is all I can get. This is all I can pay off. He might have to come out of pocket to pay off the lender. So that's a situation you want to avoid. And how do you avoid that is you put low leverage. So at Alliance, we do 60 LTV, 65 tops, maybe 50, 55. Why do we do that? I'll give you an example so everyone can learn from this. Take the market about 6 months to a year ago with rising interest rates. Remember that? Mm-hmm. And everyone forgets that interest rates can rise. Everyone thinks, oh, interest rates are so low, it's just going to stay this way. It doesn't work that way. You go through cycles and different economic environments. And so in that example is if I put 60 LTV on a property, and let's say we owned it for 5 years and I pay down debt, and all of a sudden I'm in a rising interest rate market, I have to refinance a property at Alliance. Well, maybe now I'm at, with the principal pay down 5 years, maybe I'm at 45% loan to value as an example. Well, if I refinance and I'm rising interest rates and values are dropping, and that 45% LTV, maybe it becomes 55 LTV with the new value, 60. I still have the opportunity, Keith, to refinance it and protect the property and protect my investors. And how'd that all come about? It came about because I bought it right and I understood the real estate fundamentals, but I also didn't over leverage the properties. And I learned that as a young man. I did a deal. It was a huge deal. It was like $50 million. And I put a first and I put a mezz piece on it. And we paid off the mezz piece. We renegotiated and bought it at a discount, and we were lucky. And I did that a couple of times, and I realized it's not smart to be at 85, 90, 80% loan to value because things change, environments change that are beyond your control, Keith. And to over leverage a property puts you in a situation. If the key to commercial real estate is the ability to hold, if that's the root of commercial real estate, which it is, it's not about location, and I got to understand the real estate fundamentals. If it's the ability to hold and I over leverage a property, or I don't finance it right, don't have flexibility, or don't have a relationship with my lender to have a communication, or don't have a solid platform or people around me of who I choose to interact with, it's going to hurt that ability to hold. And so that's what we do at Alliance. What we pride ourselves on is creating an environment, a situation of ability to hold. Don't over leverage your properties. Okay. Look at market rents. Look at absorption rates. Look at vacancy rates. Look at supply and demand. Most people that invest in real estate, especially commercial real estate and sponsors, don't look at barriers to entry. Because sometimes you'll buy a property, there's vacant land next to you or down the street that can compete with you, and new product can come in for expansion or even better cost of capital to be able to provide a lower rent at a better situation for tenant or tenants. And so this is what we do at Alliance. This is how we assess deals, but also making sure that you have the ability to hold, Keith. It's so important.
Yeah, I love that. I actually have not really heard that. So,
Well, I've been doing this for 3 decades, so it makes a lot of sense. You learn.
for sure, for sure. No, I love it, especially right now. It makes total sense in the environment that we currently are in. How about industrial? When we look at industrial, what is your focus there? What type of industrial?
Well, we look at distribution. We used to look at manufacturing. I think a lot of our facilities are distributions. There might be some manufacturing going on. We look for good, solid credit tenants. We'll buy single tenant. We might buy a multi-tenant industrial building. We're looking at cold storage. So we're looking in areas where there's growth, but also might support other tenants in the area. So, for example, if we own an industrial building and there's an Amazon distribution center, which they've come in around the country, we might look at, hey, we're near that. This tenant supports that, but also they sort of function in the community. So we look at the real estate fundamentals. We look at the functionality of the business. We look at why they're at the property, why they're specifically here, where are the arteries, which are the highways, expressways, and the freeways that feed into maybe the distribution of this product. What other facilities does a tenant have that they can consolidate into? So we're looking at how the business functions, how the business and other business can function in the property. We look at ceiling heights. We look at how high can we rack. We look at the amount of docks, doors, depressed docks. We'll look at that. We'll look at land with the building and the acreage we're on to say, well, what do we have to, if we have to expand? And we've done that too. We have to expand. So we look at the actual real estate. We'll look at the fundamentals. We'll look at the tenant. And it's a lot of assessment. And a lot of it, industrial is a very complicated business. And you got to really dig into those fundamentals and say, okay, how do I create the ability to hold? It goes back for everything in commercial real estate. It's flexibility in your financing, not over leveraging it, looking at market rents. So the fundamentals don't change on every single product type. But the difference is what makes a great industrial product for a specific tenant or tenants that makes it marketable. A lot of it could be ceiling heights. A lot of it could be amount of docks. A lot of it could be direct access to highways and freeways, depending on what those tenants are in the area. And then looking at the area and the growth and say, well, what vacant pieces of land can someone develop an industrial complex that can compete with? So we look at the barriers to entry. So there's a lot of decisions that go into factor. And a lot of it is you got to assess the credit of your tenants. So if God forbid you have a problem, who's your competition? And you got to look at that.
Yeah, and we've had quite a few folks kind of with the flex spaces, more of the smaller industrial. It sounds like you guys are a little bit more on the larger. Tell me a little bit about lease structures on that larger stuff. Are you looking for longer term?
Yeah, let's touch on flex because we've owned flex. I mean, the challenge of flex that a lot of people have is they don't underwrite it properly. I'll tell you why. Is flex space is really office and industrial combined. So what ends up happening is you might have a tenant vacate a space and you had a tremendous amount of office for that previous tenant that vacated. So now all of a sudden you bring in a new tenant and they don't need as much office. So maybe you had 2,000 of office in the front and it went to 1,000 square feet. Well, how flex works is you get a different rent for the office portion compared to the warehouse portion, the industrial portion, so to speak. And so now you got to blend it and you might get lower rent. And so the challenge with flex is that it's all about how you buy it and looking at the component because your office portion can vary. That's why it's so flexible. You can just manipulate how much office you need. When it comes to larger industrial, you have to look at, again, how much office space do I have in there compared to the warehouse space I need? What if I need more office? What if I buy a property with a lot of office and say it's 50-50, God forbid I lose a tenant, am I ripping out office? So those fundamentals, it's really you got to look at. You got to really walk properties and see and be boots on the ground, which we do at Alliance, is really dig in and dissect whether it's a flex, it's a distribution facility tomorrow, big or small, how many tenants is, what really is the supply and demand? Why is this going to continue to lease? And what's really market rent? And who's my competition? that's always going to be the same in any asset class, but especially in industrial, you need to look at those factors, whether it's flex, manufacturing, distribution, et cetera.
Okay. And what about from a lease term for the kind of that larger distribution type centers? I know a lot of times with the flex space, a lot of folks are looking for which a little bit surprised me, but like shorter term leases, I guess, to give them flexibility to increase it and keep it in line with the market. But is that the same with some of the larger stuff?
Yeah, the larger stuff you're going to see 10-year, 15-year leases to 5-year, 3. It depends on the situation, Keith. It's going to depend on who the tenant is, what their needs are. Are they growing? Do they want a short-term lease unless they outgrow the space? Can you expand the space for them? So every situation is different. Obviously, we want long-term leases, but even this environment, whether it's medical to other asset classes, it seems that tenants want shorter leases because if you sell the property, they don't want to pay as much taxes if taxes are going to pass through. They want their insurance costs lower as well. So they're looking to have more flexibility in their leases. That's why it's even more critical in this environment to really understand and underwrite those real estate fundamentals. I can't stress it enough because it's so pertinent in everything you do in commercial real estate.
Yeah, makes sense. Okay, so you've been in a lot of these other areas. We didn't talk retail yet, but you've started this new multifamily fund. A lot of guys seem to be actually looking the other way. They're in multifamily, and now they're starting to say, "Well, what's this industrial?" And I see people getting into different things. And it seems you guys have. What opportunity are you seeing right now? Is it the $1 trillion in debt that's going to become due? Is it what is the draw for Alliance when it comes to that?
I feel, this is my opinion, is I like the opportunity to get in, especially because we're just getting in, is we see a lot of multifamily sponsors get in over their skis, get really aggressive on financing, over leverage it, bought it where in a rising interest rate market might just be in trouble. And so we're seeing a lot of opportunities where people have to sell. And that's where we see an opportunity to get in and benefit our investors. So for us, we said, why not provide more diversification? We have a lot of staff that understand multifamily. We have someone running that division at Alliance that is incredibly talented, who's been doing this a long time. We're building staff in that division. And so for us, we felt it's an opportune time and to get into multifamily and buy at some great pricing, add value, and then in 5 years, sell a really nice portfolio.
Yeah, for sure. Well, tell me this, Ben, first, is there anything I didn't ask that you want to make sure to convey to the audience? Obviously, I want to make sure that they know how to find out more about you, all that good stuff.
Sure. I mean, Keith, obviously, I had my own podcast. Now it's a TV show and a podcast. It's called Ben Reinberg. I own it. And one of the things as I escalate in my career and as I get older is that I want to give back. And so people are learning from me business. They're learning about commercial real estate. They're learning how to get started in real estate, how to build wealth. We have a lot of people that follow me, build wealth. You can follow me on every social media platform. You can go to benreinberg.com. You can see when I'm speaking. You could see if I'm traveling a city near you. You could see when my show came out. The first season of a new TV show was called Leverage. You can watch that on YouTube. It's going to be on 1,400 streaming channels around the world soon. And season 2, we just filmed. It's called Obsessed. And we bring on very well-known people from around the world that come on our show. It's in person. First season's out. And second season's even better. It just keeps getting better and better. And then for my company, we have a lot of people that say, well, how do I get involved in commercial real estate? I don't want to get involved in minutia, Ben. I don't want to manage. I just want to invest passively because most people do. It's a headache to own commercial real estate. So they go to our website, alliancecgc.com. Keith, that's AllianceCGC. And they click Invest Now. And we have someone follow up with them, reach out to them, educate them. And generally speaking, they'll want to come in and invest in some of our products we're doing. You can also go to benreinberg.com and invest with us too. We allow you to click that invest button. The other thing that's important is feel free to go in our webinars. Join our webinars. If you follow me on Instagram at the real Ben Reinberg, or you follow me on Facebook or TikTok or LinkedIn, which is a great platform, follow me on LinkedIn. We're always announcing the webinars, who's coming on, what we're talking about, topics. We'll educate you. But also you have the ability. So for example, see this QR code. People want to get our newsletter. I write a newsletter every week, and you can go to subscribetoben.com and you can join our universe and subscribe to our newsletter. So there's so many different ways that you could touch our company. There's so many different ways you could have a conversation or touch me as well. And so we're out there. And if you're interested in investing in commercial real estate, it's a good way to get started. A lot of people say to me, how do I get involved in commercial real estate? I feel the best way to learn is start investing with us, because you'll see the quarterly reporting. You'll see what it takes. Most people say, Keith, they start seeing it and they're like, man, that's a lot of work. Yeah, it is a lot of work. It's a lot of work to do what we do. And it takes a lot of years and a lot of experience to do what we do. But that's why we open up the playing field for someone that has 100,000, 500,000, whatever they have, the ability that they can invest with us and build wealth and sit shoulder to shoulder with us building wealth. And so that's what we provide to the public.
Yeah, it's great. It's funny starting out and feeling that I had to do everything myself versus interviewing guests like yourself and seeing how much easier it would have been to just say, you know what, I'm going to allocate this towards this operator who already knows what they do. And they've got decades and decades of experience. They've got it dialed in, as you certainly do. Just makes a whole lot of sense.
Well, it's really important for everyone out there is you want to invest with smart money. You want your money aligned with smart money. And I can't preach that enough, Keith, is that, if someone's out there and let's just say, take any profession, let's just say you're a pediatric doctor, okay? Why are you going to dilute your time to invest in commercial real estate and manage it? That's going to take away time from your family and your business that your niche is. And so that's why I always go back is focus on your niche. And so if you want to invest in commercial real estate or cryptocurrency or whatever you want to do, leverage into someone that's been there, done that, they can help you, that's higher on the learning curve, but also is smart money. And smart money is everything in investing.
Yeah, makes total sense. All right, Ben, I've got a couple more questions for you that I ask every guest.
Ahead.
One would just be, what advice, and I gave a little bit just a minute ago, but what advice you'd give somebody who's maybe just starting out in their investment journey?
I would say in their investment journey or even business is really focus on yourself, work on yourself. Personal development is so critical. It's important in my life. And the reason why I say that is you have to be able to manage your emotions. Okay, what you're going to invest in, what business you're going into, and being grounded, managing your emotions and being able to make good decisions is critical. And so being the best version of yourself and working on it and getting rid of past issues you might have is so important because it allows you to make good decisions, Keith. And making good decisions helps you with your investments where you can sleep at night, but also you want to pick people and choose people, and working on yourself allows you to make those good decisions of who do I want to invest in? Okay. So when people invest in Alliance, they know our core values: transparency, integrity, consistency, and expertise. Okay. Well, that's what they get when they invest with Alliance. And that's the quality of people that we hire that are running these investments too within the company. And so understanding who you're investing in. But I always ask this one question. I want everyone to hear this because I think this is really important, because no one asks this question when they invest with people. How do you solve challenges? How do you solve challenges? Because anyone can pay you a quarterly return. Anyone can pay you a dividend. Anyone can produce profit if they're lucky enough. But when times are tough, whether it's rising interest rate markets, whether you lose a tenant, whether things don't work out as you planned, and you have to audible and pivot, who are you dealing with? How do they deal with it? What experiences they have? Give us examples. And those are the people I invest with. I invest in other people outside Alliance, different asset classes that are experts. And that's the first question I ask. And that tells me, because when the chips are down, Keith, and times are tough, who's going to rise to that occasion? That's been the story of my career. That's how the key to my success is I could deal with challenges, but I could balance my emotions while it's going on. And so working on yourself, with you're out there and you're younger and you're getting started in business, or you have some capital and you want to invest, or you want to invest with Alliance, is work on yourself. Be that version of yourself, because things are tough in life and life's not easy. And when you can manage your emotions and you can manage yourself and balance yourself, you'll make great decisions in whatever you do.
That's great advice. Ben, one last question for you. Just maybe a book recommendation. I always ask for the audience, but I always ask for myself as well. It doesn't have to be real estate related. Certainly can be just something you've read that's been impactful.
Well, there's a couple of things. I read a book by Dr. Nicole LaPera recently. It was called Be the Love You Seek, which helps you with personal development. Phenomenal book for people out there. Another book I'm reading right now is through a friend of mine. His name is Brant Menswar, and he gave it to me about 9 months ago. And it's been sitting on my shelf. I started reading it, and I'm probably about halfway through now. And it's called Black Sheep. And it's a really interesting book. Another book that I recommend that I read recently is called Ego is the Enemy, which I thought was a really good book to read. It's a little complicated at first, but if you hang in there, it's got some great lessons. So a lot of great books out there, and I love to read. I try to read 10 pages a day. It's actually interesting. I'm doing Andy Frisella's program right now, 75 Hard. I am on day 61. I'm 14 days left, 2 weeks, and I'm almost there. And part of his program, which I enjoy, is you read 10 pages of a self-improvement, personal development type book, nonfiction. And I'm glad that's part of it, because I'm going to do it anyways, but it's been wonderful. And so, definitely if there's some good reads out there. And I'm always, look, if anyone out there has great input, just DM me. I'm always looking for great book recommendations.
Yeah, sounds good. Well, Ben, this has been awesome. I really appreciated having you on the Wealth Flow, and I think we'll call it a show. Thank you so much.
Great. Thank you so much. Appreciate it, Keith.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.